Welcome to the deep dive, where we cut through the noise and really get straight to the insights that matter. Today, we're plunging into something truly remarkable, a tech giant defying expectations in a pretty big way. You're talking about Apple Inc., of course, and their Q3 fiscal year 2025 earnings report. Our mission here is simple. Unpack what really happened, pull out the most important nuggets from analyst reports, company statements, all that financial data, really to give you a shortcut to being genuinely well-informed about Apple's current state and its future trajectory. And here's the headline right up front. Apple didn't just meet expectations, they kind of shattered them. They delivered a resounding statement, a decisive beat against analyst consensus, posting quarterly revenue of $94.0 billion. That blew past the $89.34 billion consensus by over 5%. And the earnings per share, diluted EPS of $1.57. That was more than a 10% surprise against the $1.42 consensus. This wasn't just good, it marked a June quarter record for total revenue, iPhone revenue, and EPS.
It's quite astonishing, isn't it? I mean, this robust performance immediately invalidated those more cautious analyst models that were, well, bracing for a slowdown. What we really saw was a clear demonstration of Apple's, let's say, formidable operational execution and just the enduring appeal of its product ecosystem, even in challenging times.
Okay, let's unpack this then. Apple just smashed through expectations. With all the talk about macroeconomic headwinds, tariff impacts swirling around, what's the single most surprising element of this decisive beat for you? What does it really reveal?
For me, I think the most surprising element is just the sheer magnitude of the beat, especially against such a challenging backdrop. When you look at the headline numbers, right? Total revenue, $94.04 billion. That's up almost 10%, 9.63% year over year from $85.78 billion last year. And that diluted EPS of $1.57. Remember, that's earnings per share. It's up a remarkable 12.14% year over year from $1.40. The company also reported net income of $23.43 billion. So, this isn't just about impressive numbers on a spreadsheet. It's about a company showing incredible resilience in the face of pressures that have really tripped up many others. It shows a deep understanding of their market, their customer.
Yeah. And here's where it gets really interesting, I think. The report credits this success to three critical interlocking dynamics. Now, of those three, which one do you think analysts maybe underestimated the most, and why?
Oh, that's a great question. While all three were definitely crucial, I think the pivotal and frankly surprising return to growth in the Greater China segment was probably the most underestimated. Analysts had sort of built in a negative narrative there, right? Fearing market share erosion.
Right, lots of concern there.
Exactly, and Apple just decisively reversed that. But let's quickly lay out all three foundational strengths. First, you've got that unwavering iPhone demand. It showed significant pricing power, shrugged off slowdown fears, double-digit growth. Impressive. Second, as I mentioned, that Greater China rebound. Really key. And third, and this is perhaps most indicative of Apple's long-term value, the high-margin services division. It just continued its powerful acceleration, reaching a new all-time revenue high. And that directly reflects the monetization power of Apple's, ever-expanding installed base.
And it's fascinating how these pillars allowed Apple to sort of comfortably absorb those geopolitical cost pressures, like the tariffs we keep hearing about, while still continuing strategic investments, particularly in what they're now calling Apple Intelligence. That speaks to serious strategic foresight.
Absolutely. I mean, they are operating with a remarkable degree of financial flexibility. Few other companies can match that.
So beyond just the impressive sales figures, I'm curious about the health of their operations. How efficiently are they truly pulling this off, especially with those macro pressures in the background?
Yeah, that's a crucial distinction for a deep dive like this, right? It's not just sales. And a deeper look at the income statement, well, it reveals a company operating with pretty impressive efficiency. The reported total net sales, that $94.04 billion, represented robust year-over-year growth of nearly 10%. And critically, this wasn't from just one thing, it was broad-based. We saw double-digit growth in the key iPhone, Mac, and services segments. And growth across every single geographic region. But here's what's even more impressive, I think. Diluted EPS growth at 12% actually outpaced revenue growth at 10%.
Okay. Why is that significant?
Well, it's a crucial indicator of Apple's powerful financial model. It stems from two key factors. One, a shifting sales mix towards the higher margin services business that naturally elevates overall corporate profitability.
Makes sense.
And two, an aggressive capital return program, specifically those share repurchases. They reduce the number of shares outstanding, so they amplify the earnings for each remaining share. Remember, they authorized another $100 billion for share buybacks last quarter.
Right. Huge number.
Huge. And despite facing that guided $900 million headwind, basically, a financial drag from tariffs, Apple's strong services growth more than offset hardware manufacturing costs and tariffs. That shows excellent profitability management. Their operating expenses were $15.52 billion, with a big chunk, $8.87 billion in R&D, leading to a strong $28.2 billion in operating income. That significant R&D spend reflects their commitment to future silicon, new product categories, and yes, Apple Intelligence software.
It really sounds like a company firing on all cylinders, finding leverage wherever they possibly can. Okay, so we've seen the big picture on the financials, but let's get granular. What were the real workhorses? Which products and services really drove things this quarter?
Well, no surprise, the iPhone segment was, as usual, the enduring star. It pulled in $44.582 billion in revenue. That's up 13.4% year over year.
13.4?
Yeah, it dramatically exceeded consensus estimates and set a new June quarter revenue record for the iPhone. And this strength was multifaceted, right? Driven by resilient demand for premium models, the successful reception of the more affordable iPhone 16, and crucially, those strong sales in Greater China we talked about.
Cool.
Then you have services. Hit a new all-time high, generated $27.423 billion in revenue, up 13.3% year over year.
Another double-digit grower.
Exactly. And this new record is, well, it's causally linked to the new all-time high installed base of active devices, now over 2.35 billion.
2.35 billion devices.
Yeah. It's staggering. Each hardware sale basically expands the market for those high-margin services. App Store, Apple Pay, iCloud, Music, TV Plus Now. It creates this highly stable, predictable, recurring revenue stream. It's a powerful, self-reinforcing business model. And don't forget the Mac. It showed a strong resurgence. $8.046 billion in revenue, double-digit growth there, too.
Really? What's driving that?
Well, it can largely be attributed to Apple's own M-series silicon, like the M4 chip. The performance, the efficiency, the battery life advantages, they're significant. I remember when the M1 first came out, even competitors were acknowledging how much it changed the game for laptops.
Yeah, definitely.
And finally, you had iPad bringing in $6.581 billion, and wearables, home and accessories, contributing $7.404 billion. They round out the picture, adding to the breadth and depth of the hardware portfolio and, strengthening that ecosystem.
That direct link between the hardware sales and the services profit is just it's fascinating. Is that synergy something uniquely Apple, or can others replicate it?
Well, it's certainly a core differentiator for Apple. Because of their tight vertical integration and just the sheer scale, that massive installed base, each part of their ecosystem truly reinforces the other. It's hard for others to fully replicate that lock-in and scale.
Right. Okay. Apple's a global company. So beyond the core markets like the U.S. and Europe, were there any surprises on the global map for Apple this quarter?
Absolutely. I mean, the Americas, $41.198 billion, and Europe, $24.014 billion. They provided that stable, predictable foundation. Solid performance there.
Standard playbook.
Pretty much. But the most closely watched geographic result was definitely Greater China. It posted $15.369 billion in revenue. Now, that was up 4.5% year over year from $14.7 billion last year. And it successfully reversed those recent concerns about slowing device sales.
Okay, so good news from China then.
Yes, but, this reminds me of that classic business dilemma. Sometimes your biggest opportunity is also your biggest risk. While this rebound is undoubtedly good news, the strong performance kind of illuminates a core strategic paradox.
How so?
Well, the growth reinforces Apple's dependence on China, right? But it exists concurrently with all those ongoing geopolitical tensions. So the strong sales, paradoxically, almost amplify the underlying investment risk associated with the region.
Huh. So for investors, the China question hasn't gone away. It's just gotten more complex.
Exactly. It's not resolved. It's just, more complex. A strategic tightrope walk, really. And just quickly, other regions like Japan, $5.782 billion, and the rest of Asia-Pacific, $7.673 billion, also contributed. That rest of Asia-Pacific segment is particularly important for Apple's long-term growth in emerging markets.
Right. A strategic tightrope walk indeed. Okay, shifting gears a bit. Beyond the numbers, what were the key strategic takeaways? What were Apple's leaders signaling about their future direction, especially on big topics like AI and global trade?
Well, management was very direct in addressing that $900 million tariff headwind they'd anticipated. No hiding from it. And their strategic response, which isn't new but is ongoing, is this multi-year systematic diversification of their manufacturing footprint. They're actively shifting iPhone assembly to India, expanding partnerships in Vietnam. It's a clear move to de-risk their operations from over-reliance on China. Sensible.
Okay, makes sense. And what about AI, Apple Intelligence?
Right. On the Apple Intelligence narrative, management really pushed back against the perception that Apple was late to AI or doing a slow rollout. Their strategy, as they frame it, focuses on a deeply integrated experience, one that prioritizes user privacy.
Classic Apple.
Classic Apple. It leverages powerful on-device processing using their own silicon, and it works seamlessly across the entire ecosystem. Again, it's that focus on the user experience rather than, say, winning a technical specs war on paper.
But does that leave questions open for investors?
It does, absolutely.
Yeah.
This approach leaves open key questions about potential partnerships, the global rollout timeline, and crucially, the path to monetization. How does this actually make them more money?
Right, the big question.
And through it all, a constant refrain from management, probably the single most important concept for understanding Apple's long-term value, is the power of that ecosystem. Anchored by the 2.35 billion plus active devices, that is the economic foundation of the whole company, directly feeding that high-margin services revenue stream.
So if we connect this back to the bigger picture, it really seems Apple is taking the long view on AI. What does their methodical approach tell us about how they manage innovation generally?
Yeah, I think it tells us they prioritize integration and user experience above almost everything else. They'd rather get it right, make it feel seamless and intuitive within their ecosystem, than be the absolute first to market with something that might feel, well, a bit clunky or standalone. It's very methodical, very ecosystem first.
Okay, so looking ahead now, no company is without challenges or opportunities, right?
Yeah.
What keeps Apple's leadership up at night, do you think? And what gets them excited about the next few quarters?
Well, first off, Apple didn't give specific quantitative guidance for Q4, which isn't unusual for them lately. So investors are really relying on the qualitative commentary, especially around gross margin forecasts.
Got it. So the risks.
The risks. Well, geopolitical and macroeconomic instability remains, I'd say, the most prominent risk, especially given that supply chain and revenue exposure to Greater China we discussed.
Still number one.
Still number one. Then there's regulatory scrutiny, ongoing pressure, particularly around App Store practices in the EU and elsewhere. Intense competition, obviously, across all product categories, smartphones, AI, everyone's gunning for them. And related to AI, there's significant execution risk. Can they deliver a truly compelling AI experience that actually drives those crucial upgrade cycles? That's a big if.
Okay, so those are the challenges. What about the potential upsides, the catalysts?
On the flip side, yeah, the catalyst. Product cycles are always key for Apple. The upcoming iPhone 17 launch is seen as a significant near-term catalyst for upgrades.
The next big refresh.
Potentially. And if they are successful with AI monetization, that could drive further hardware upgrades and maybe even new premium tiers of service. That's a big potential upside. Emerging markets like India and South Asia offer huge long-term growth opportunities. And while it's always speculative, the potential introduction of completely new breakthrough product category, that always remains a major, albeit uncertain, long-term catalyst. The next big thing.
Right. So even after a slam dunk quarter, as you called it, it's definitely not without its strategic high-stakes games ahead for them.
Never is. Not for a company of Apple's scale and, frankly, influence. The stakes are always incredibly high.
And so we conclude this deep dive. Apple's Q3 was, by any measure, really, a powerful validation of its core strategies and its operational excellence. It's clearly built on just unparalleled financial strength, a vast and deeply loyal installed customer base, and that incredibly powerful self-reinforcing flywheel between its hardware products and its high-margin recurring revenue services business. The central question, though, the one that's going to define the next chapter of Apple's growth story, really seems to be whether its deliberate, privacy-first approach to artificial intelligence can actually catalyze that next supercycle of upgrades and value creation.
Yeah, that's the crux of it. The market remains focused on whether Apple Intelligence can fend off more nimble, perhaps more aggressive competitors in this new AI-defined era of tech. But the performance delivered this quarter provides some pretty formidable evidence for a long-standing market truth. Betting against Apple's ability to execute, to innovate on its own terms, and to captivate the global consumer. Well, historically, that's been a losing proposition.
A final thought then for you, our listener. We encourage you to consider what this quarter means for Apple's long-term future, and maybe even how your own tech habits might reflect some of these powerful trends we've talked about.